Hi everyone and welcome to Forex Winners. In this report I'm going to introduce you to a very unique and interesting trading technique that is about as close as it gets to picking tops and bottoms. First we'll take a look at the FX Cogmaster indicator, then we'll take a look at the Forex Cogmaster H indicator, and we'll even throw in a nice filter too as our entry trigger. So what is COG anyway and what does it mean? To be precise, it stands for center of gravity, and the theory basically states that price has a mean average or center of gravity that it always rotates around. Basically, as price fluctuates up and down, it will come back to its average and return to an appropriate value. When price gets too high, it will come back down, and when it gets too low, it will come back up. We can see price do this over and over on our charts, and as traders, we are constantly trying to figure out how to capture these swings. Let's take a look at our first indicator, the FX Cogmaster, and this will become a bit clearer. On the chart below, we can see the 4 hours chart of the Eurist with the FX Cogmaster. You can see that there is an upper green line that rotates over the top of price and a lower green line that rotates underneath price. There's also a blue line that runs dead center in between. This is the center of gravity line. As you can see, price rotates up and down inside of the upper and lower borders and occasionally stalls in the middle, making the center of gravity line a great place to take profits, while the upper and lower borders are great places to look for buy and sell trades. When prices reach the upper border of the FX Cogmaster, it can be said that the market is overbought. On the other hand, if price is at the lower border of the FX Cogmaster, it can be said that the market is oversold. In both cases, there is a very high likelihood that price will return to its middle line or center of gravity. Now, let's talk about the next indicator. The next indicator that we'll look at is the FX Cogmaster H. This is an oscillated representation of price in relation to the FX Cogmaster on the price chart. It looks a lot like the MACD actually, but has completely different calculations. I've also added a 9-period SMA as a signal line to it. This indicator is pretty cool. It adds an oversold and overbought line automatically depending on the value of each currency pair you add it to, so it automatically calculates at what levels the indicator and price is overbought and oversold. When price is above the upper line, the market is overbought and will soon come down. When the market is below the lower line, the market is oversold and will soon rise. The histogram also has a zero line that represents the center of gravity line on the FX Cogmaster price indicator. Whenever price is above the zero line, price is above the Cog line, middle line, on the FX Cogmaster on the price chart. The yellow line here is the 9-period simple moving average. This is a lot quicker to pick out the reversals and doesn't lag behind price, giving you a much better entry. So let's take a look at both indicators on the charts together. The similarities are pretty clear, but there are some subtle differences that we need to take note of. There will be times when price doesn't quite get all the way to the outer lines of the FX Cogmaster on the price chart, but the histogram will show overbought or oversold conditions. This is fine as long as the signal line on the histogram is in the overbought or oversold area. We can look for trades. We've also added a 9-period simple moving average set to typical on the price chart, which we will use to identify our entries. I think now is a great time to get our ground rules down so we know exactly what our plan of action is and know how and when to attack the market. Once we've laid out the ground rules, we'll take a look at a bunch of different buy and sell examples. Follow the rules before placing buy trades. 1. On the higher time frame, wait for the FX Cogmaster H histogram and yellow SMA line to close below the oversold line. 2. On the higher time frame, confirm that price is at or near the lower green FX Cogmaster channel line. 3. If the above conditions are met, switch to the lower time frame. 4. On the lower time frame, wait for FX Cogmaster H histogram to close above the yellow SMA signal line. 5. On the lower time frame, wait for price to close above the 9 SMA on the price chart. 6. If the above conditions are met, enter a buy trade at the open of the next candle. 7. Set your stop loss below the most recent swing low on the lower time frame. 8. Set your take profit the same distance away from the entry level as the stop loss, 1-to-1 risk, reward ratio, or exit the trade manually when price touches the blue middle FX Cogmaster line or the upper green FX Cogmaster line. Now, let's see this example trade. We have a recent price chart of the AutoSt on the 4 hours time frame which lines up pretty well for a good sell trade. This is one of those occasions where things are close and you will run into these quite often. Take a look at the yellow vertical line. At this point, notice how the FX Cogmaster H histogram is above the overbought line and the signal line hasn't closed above it yet, but it is very close. You will also notice that price is near the upper FX Cogmaster channel line. Now, let's take a look at the 1-hour chart. Here we've got a great scenario where price is punching through the upper channel line. The histogram is way overbought and so is the signal line. As you can see, 2 bars later we get our drop below the 9 SMA trigger line. It's interesting to note here that as price moved down and hit the bottom FX Cogmaster channel line, this happened to be the middle blue FX Cogmaster line on the 4-hour chart. You can download the system now and check more trading examples on the user's manual PDF. Happy trading for all the winners. See you soon.